Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of January 26th, 2025. And in this week's episode, Viper XL 007 is back with us. So you guessed it, we've got a little bit of a crypto episode coming at you. There has been, I don't know what Viper did while he was gone, but he sure did stir up the world of crypto, and now it's all over the place, even more so than before the end of the year. And so I got a couple of questions to pose with him about what is this centralized, the decentralized currency is really scratching my head, and I kind of want to discuss that a little bit. Also, what the heck? The price just keeps getting driven higher and higher. And there are analysts out there saying, $1 million Bitcoin is possible and likely 500,000 by the end of the year. I mean, just crazy numbers. And I just want to have a little discussion around what the heck is the valuation here? And is this a real currency? And then lastly, we know we must be in full bull mode because I just heard about an ETF that trades in Bitcoin, and they promise you no downside risk, 100% downside protection. You get all the benefits of upside of Bitcoin and none of the risks of the downside, which sure sounds like snake oil to me. So we're going to talk about that one as well. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, talk to myself, Viper, some of the other Blockhead traders. We'd love to hear what you're trading, love to hear what type of content you want to hear about. Also, you'll find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. So look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's episode. Viper, welcome back. It's been many an episode without you, and I'm sure the viewers are tired of hearing about premium selling and all of my volatility adventures, or maybe not. I don't know. There's only 4 of them, so I'm not sure. We'll have to query each of them to see. But you've been away, and crypto space has just exploded in this past week with the inauguration of the new president and kind of all the different news stories and stuff leading up to him. We don't largely try to touch much of politics, but in this case, there seems to be just something scratching my head, and that's this initiative or discussion around creating a central U.S. repository of Bitcoin. So I'm curious about, some of your thoughts when it comes to that, in just anecdotally reading a few things here or there, because to be honest, I'm not super care much that about it, but it is kind of an interesting, why are we going to stockpile Bitcoin? I did realize that one of the largest holders of Bitcoin globally, or in the entire world, is actually the United States government. I think it's the Department of Justice, basically from reclaimed wallets and things like that they happen to recover through whatever work that they've done, and they don't really know what to do with it, so they just kind of been putting it in a wallet and sitting on it. And it sounds like it's a decent amount of coins, at least from a few of the places that I was kind of reading. And I don't know if that was the start of the idea or what, but what on earth? I kind of get U.S. petroleum reserves a little bit, they open it up when there's, dependency on foreign oil, hey, there's a shortage, we can't get it. At least we have some things for our own domestic use. But in oil, there's a utility to it, right? That's a thing we consume, a thing that drives a lot of the economy and stuff like that. And I don't know, from my perspective, maybe it's a naive perspective, maybe it's an old curmudgeon perspective, but I'm like, what is the value in stockpiling Bitcoin at a national level? And so I don't know if it's anything you know much about, Viper, but I'm curious to hear some of your thoughts on that.
Okay. There's a lot to unpack. And I guess some of this might actually set up the next topic. So anything that might be a dangling thread, we're going to leave that dangling. We're going to give that a tug in just a minute. So purely focusing on the end, and I'm not for or against such a reserve. In the spirit of not getting political or too political, I mean, I certainly feel like the idea of it is being used very politically. I'm not saying it's a good or bad idea, but it's the whole space is kind of being used very politically right now. That's a thing. And that's all I'll say on that. So getting all that out of the way, ignoring all of that, what is the functional point of such a thing? And there's a lot, and I understand, especially to viewers who may very rightfully be skeptical of the entire blockchain cryptocurrency space. There's a lot that I'm going to ask to be put on hold just for a second. And so we're going to focus on, there's this thing, and it's purely digital, and it has value. And these are some threads now that we're going to leave in place here. So the point of it is very reminiscent to, I mean, I'm going to keep using the analogy. The whole space is going to keep using, everybody's going to keep using the analogy. I don't think it's perfect, but digital gold, we've all heard that. Digital gold, it's like digital gold. It's gold, but it's digital. And I mean, it feels overused, but it also still feels somewhat accurate. So the Federal Reserve today, as far as I know, still maintains a gold reserve. Actually, not they definitely do, because I just recently saw a YouTube video of the reserve. And if you haven't seen it, holy smokes, you should look it up. I mean, just search like tour U.S. National Gold Reserve or something like that, and it's this crazy underground bunker. The one video I saw, like they go down there, and I mean, it's just this massive room, tons and tons, literal tons of gold on racks. And so I think that's an important visualization to have. So, stepping out of the digital world, the government has possession of tons of physical gold. And what are they using that for? They're just holding it. It's a reserve. And I am far from an expert in this area, so do not accept anything I say and go do your own adventure into the world of knowledge. But the whole purpose of having this reserve, which is a thing that people will pay for, that is not directly connected to the US dollar. And so the whole reason for that is to be a hedge against economic uncertainty, currency fluctuations, all of that sort of stuff. If the dollar plummets just ridiculously into the ground, like, we still have this reserve of gold, which is worth money in its own valuation to everybody around the world. So that is a potential hedge against economic uncertainty. I guess we'll leave it at that. So the idea behind a Bitcoin National Strategic Reserve, or whatever you want to call it, is literally the same thing. It's, let's digitize that idea. Have this massive store where we just sit a pile of Bitcoin, and now just really visualize that. There's a room full of gold. Now there's a digital wallet full of Bitcoin. And it's, as I understand it, it's the same purpose, the same exact idea. It's just modernized to a digital future, where the blockchain and cryptocurrencies enable the technology to go in order to make that possible. And so, again, there's a lot of threads there, a lot of details, a lot of weeds, but at a very high level, I would say that's my understanding of it and the purpose. So I don't know. I mean, if that rings any bells or nudges you along in any particular way, but I think that's where I'm at on interpreting it.
I guess I'll have to do a little research on myself to see if we've ever tapped into our gold reserves since the beginning of time. I know originally, I do believe the gold reserves were set up to basically give our currency a backing, to basically say, hey, don't worry, don't take our word for it. We've got gold bars. So if anything happened to our currency, we got gold bars. And for a while, it was on the gold standard, right? Where there was an equivalent amount of gold to back up the amount of money in circulation. We've long since left that behind. And we do not have that today. And now we basically have what's known as a faith-backed currency, where the only thing that really gives our currency value is the faith that it actually has that value. So I guess I can kind of see that, a little bit of that analogy. I'll still have to wrap my brain. I mean, I don't really know why we stockpile gold either. But I guess your explanation is kind of there. I guess I equated it more to like the U.S. petroleum reserves or things like that, which actually have a lot more utility. But I guess these things would have utility from the standpoint of, oh my gosh, the currency is trash and nobody wants the U.S. dollar. I guess we could go start shilling gold bars. It's kind of weird, but
Yeah, and I mean, I would maybe. I mean, ultimately, I think where you were headed there that's still where I'm at, as far as it's not meant to be as utility of a thing as petroleum or anything like that. However, there's certainly the argument of yes, it's utility, but it's if this thing is going to become a global presence and a globally sought after store of value, thing of value, then inevitably with it comes power. And I mean, that's what a lot of people are banking on. And by people, I mean countries. There's from one extreme of like Venezuela, who's using Bitcoin as their national currency, through countries that still, don't even care about it or aren't even paying attention to it. And that with something of value that a government can accumulate that everybody wants, with that comes value. And so maybe that goes more into the hedge protection side of things, where kind of like you just said, if the dollar plummets and everybody's like, we're so done with the US dollar, we don't want it anymore. And then all of a sudden we're like, okay, well, you want Bitcoin? We got that too. So now whatever obligations you were doing for us, you're going to keep doing it because we're powerful. We have the Bitcoin, you want it, and et cetera, et cetera.
So I mean, I guess it kind of transitions to the value. Like, what's the thing that is giving this Bitcoin its valuation, right? So again, I kind of go back to that utility of things and currency, the U.S. dollar, the European euro, all of those things. They have utility because they let you buy and sell goods and services and things like that. I guess where I start to struggle here is I don't know a lot of places that you exchange Bitcoin, and it just seems almost like the scarcity itself is driving just a gimme, 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 gotta have. And I find it super kind of ironic, and I'm probably jumping all over the place here, but I find it super ironic that the governments are interested in kind of stockpiling this. And I guess if you frame it around that control aspect that you mentioned, kind of makes a little bit of sense. But the reason I've always thought governments would shy away from Bitcoin, and I think you might be able to find me talking about this earlier, is it takes away the control that governments typically have, right? The governments like to control their own currency because they can control the supply of that currency. They can flood the market with the currency. They can pull that currency back. In Bitcoin, they don't have that ability. They can't manipulate the currency. And maybe that's why they're trying to stockpile, because the only way to really manipulate the market would be to be the majority stakeholder, I would think. It's not like they can flood the market with additional currency. They can't pull it back, stuff like that. But from your perspective, how do you value Bitcoin? Like, how do you put a fair valuation on it? Like, oh yeah, a Bitcoin, that should be worth 100 grand. Like, I really have a hard time conceptualizing how to put a valuation on it. Probably because my perception is there's not a lot of utility in it.
So that's, I mean, I think that's all fair, and this is where we really get into what I think is a very interesting thought experiment of where we're at. Just big picture, zooming out, and one of the reasons why I like talking about it is because of that big picture, novel concept. Nobody knows kind of thing. Like, I mean, I can have a committed, dedicated idea and it could change completely tomorrow. It could be completely wrong, because there is no pattern. Like it's just uncharted territory. So that said, um, one of the things driving the value of it is certainly the scarcity. I mean, I think you hit the nail on the head with that. That is, I would say, 100%. That is the driving factor in it right now. It's not the currency aspect of it, even though yes, there are entire countries using it as a currency. It's just personally, I have zero interest in using it as a currency. Uh, it's just too volatile. Now, without going down a rabbit hole, many people would say the US dollar is massively volatile as well. We just don't see it because we're denominated in it. I think that's fair. um, but that's a side quest. So, you could kind of go down that path as far as knowledge expansion. Um, so the thing giving it value is the scarcity of it and the fact that in the digital age it has deterministic, verifiable immutability, uniqueness, and so a lot of word soup, but immutability, it can, the record cannot be changed. Uniqueness, if I say I have zero point 0.1 Bitcoin, I can prove it and I can't fake it. And so, that leads to the scarcity. There's a capped supply. It will never exceed this amount. And we talked about that on a previous episode. So, um, there is potentially, I mean, assuming it continues to be a thing, a sought after thing, there is potential where it eventually hits maybe more of a stable price level. Once, it's fully diluted or fully distributed and all that sort of stuff. We're very much in the money piling in phase, which is making it so volatile. So I'm certainly of the belief that there is potentially a logarithmic curve here or something that kind of levels out eventually. No idea the time frame. That's a significant time frame. But I think the thing that's giving it value is that scarcity and the digital verifiability of the scarcity. And so now we start to tie it into that concept of a hedge because just like gold, there is potentially a capped amount of gold on this planet. And so, the more we find as civilization, the less there is available, the more scarce it is, yada, yada, yada. And so this shows a very similar pattern, but purely digital. And so to me, that's certainly part of it. And I would say on the fact that it's not used as a currency globally, but still has this value baked into it. I mean, I think it still kind of goes to your petroleum reserves. I mean, there's tons of reserves that you should. I mean, you should another knowledge rabbit hole. Go look up how many reserves the government actually has. And so one thing that comes to mind is like rare metal reserves and helium reserves. We have a massive stockpile of helium. But even the rare earth metals, like these things, yes, they do have value. So sorry, utility. So there is still that aspect of what you're talking about, but they're certainly not used as currency. They have a value that's tied to something other than currency, and it's certainly tied to scarcity. And I just feel like that's kind of where this all falls into. But now it's just in the digital realm, and it's blowing up, and it's acceptable because of that immutability and the verifiability of that immutability. That we finally have the technology to make it possible to keep that value and not just be copy pasted or double spent and kind
Yeah,
of, along
actually,
those
that's
lines.
that. So that, man, I feel like I'm gonna be the Bitcoin curmudgeon here this episode. That immutability and that technology. I would caveat that with, yeah, today for now. Right. So I look at the way that the ledgers work, right? It's all built on cryptography. It's built on the immutability of hashes and the fact that you're signing this thing with crypto algorithms that are unbreakable today. And what happens in the future? Because there was crypto that we used to use not so long ago, in both your lifetime and mine, where it was considered secure, safe. No one can do it. And then along came GPUs and along came other things that basically made compute more possible. And now these things are complete garbage, like MD5, right? That's a hashing algorithm out there that is complete junk. It has clashes. It has clashes. It's easily ripped through in the compute power there. And I look at one of the other new upcoming hot spaces aside from AI, right? It's quantum computing. Like quantum computing is going to bring a level of calculation that has not been seen before, an amount of things. And so what happens? I don't know. I guess it's a bunch of what ifs, right? But I don't know, man. I just feel like there's a lot of giddiness here on this wave, and maybe the wave can still go another 10x, 20x, 100x from here. But I just don't see in my brain this wave being like a precious metal or something. Like it's not like you're going to crack the code of gold and fabricate your own equivalent thing. At least that hasn't been done yet. Maybe they would, but I don't know, Viper.
Yeah, I mean, so I think that touches on something that I really wanted to harp on, knowing that this is what we were going to talk about, and that is, as much as as much as whatever I said or whatever you hear me say on the show, as much as whatever in favor of I may sound, make no mistake that I fully believe in the fragility of the system, which is kind of exactly what you were just talking about, where you have like if you're, let me back up and reword that, where if you're thinking about like, oh, this is something I should put my money into, I would be remiss, either of us would be remiss if we didn't mention the same thing we mention about anything on this show that you think you want to put your money into. If you do it and you don't understand the risks and you don't understand the underlying, then you are throwing yourself way over your skis. And so that is to say that exactly like you just outlined, like, do I think a version of digital currency assets is here to stay? Absolutely. Is it Bitcoin forever? No, nothing guarantees that. There absolutely tomorrow could be a much better, a much more appreciative, a much more desired, whatever. It's a technology. At the end of the day, we're talking technology, not physical rare metals, like you said. And technology evolves, technology advances, technology replaces what came before it. And so if you're thinking you're going to throw money in this and just ignore it for 60 years and come back to billions of dollars, like, you're in for a bad ride, because you don't understand what's underneath of it, and you're not paying attention to the landscape. And so I think that's really important to call out, that I'm comfortable with my money in it, but I'm comfortable because I'm paying attention to that landscape. I'm evaluating my own risk mitigation, my own risk tolerance, and all that kind of stuff. So, so then the only thing I also wanted to say to quantum computing, because you're absolutely right, that is a huge threat to the blockchain. But to be clear, that is a huge threat to all digital security.
100%.
Would you agree with that?
100%. But
So Like, and I'll even simplify it even more. That is a huge threat to SHA-256, which, I mean, there is more, like there's SHA-512.
So
Like it
here's
keeps
where I
going
think
up,
is
right?
it's more important in the crypto space. Okay, here's where I think it's not. You're 100% right. That's a risk everywhere, but there is, let's say, something goes wrong, not wrong, something is challenged, right? In other things, you just simply switch to a new technology, right? I just simply change out, okay, now I'm, TLS 57 and a half or something like that, right? That's based on quantum resistant computing, whatever. But in
Yep.
crypto, in Bitcoin, your entire wealth is dependent on the integrity of that ledger. And you don't just get up and move it to something else, right? Who's going to coordinate that? How do you do that? How do you do that without that ledger getting tainted? I think that is the tricky part. And
Yeah.
the one other piece I'll tie into this that just, I don't want to sound like that guy that's like, this guy is falling, but I mean, go back to the 1900s, right? Banks were infallible. Put your money in the banks. They're going to take care of your money, right? What happened in 1929? There was a run on the banks. The whole entire financial system collapsed, right? And I worry a little bit with the focus so much on crypto this, crypto that, like, yeah, it's one thing for you and I to pay attention to where we put our money, but when the ecosystem starts transitioning to something like that, right? That's beyond you and I. And that's going to have, or could have, very large ramifications to society, right? If something like that ends up being, now I guess this is all doomsday, and maybe I'm just grumpy today, but I feel like like there's a real risk out there that I don't know that is being even remotely considered.
So I really want to hone in on this quantum computing threat and kind of what you just said along those lines, because this is where it's really really important, and this is actually perfectly showcasing the importance of that understanding the underlying that you're getting involved with, because yes, quantum computing is an existential threat. That is not hyperbole. That is not satire. It is an existential threat to the blockchain. Specifically, it's an existential threat to all security, all digital security. But like you said, a digital software system clicks a button and all of a sudden it upgrades to, whatever. Um, However, blockchains are equally upgradable. It is not nearly as smooth as a software algorithm flipping a switch, but it is, and I don't want to say the word simple, but it is as simple as what's called a hard fork. And this is, so again, knowledge rabbit hole. Google blockchain preparation for quantum computing or something like that. There are actually a lot of very interesting discussions starting at the Bitcoin level, but down the chain to other chains and whatnot, of what to do about this. There is certainly no heads in the sand, um, and I myself still need to brush up more in detail on the conversations. But the general gist of it, of what I've seen so far, is the solution is to find, one of these more quantum resistant algorithms, kind of like you were just mentioning, and upgrading the consensus mechanism, upgrading the transaction, upgrading the chain with this new quantum resistant algorithm. And that takes a lot of planning, that takes a lot of preparation. And then, so let's pretend like, okay, we got it figured out. If only the blockchain used this particular algorithm, this particular hashing method, whatever it is, then it would be safe. So once that's all settled, once we have the plan in place, then this kind of gets into, this is going to be really abstract for a lot of people, but it also gets into the beauty of the blockchain, of a let's just not even say blockchain. The beauty of a truly decentralized distributed system is that once a new path is created. So once it's decided that we need to go this route, guess what? No single person can pull the trigger on that decision. It has to go to stakeholders. It has to go to a particular I don't remember what they're called on Bitcoin, but it's stakeholders have to vote on the thing and being enacted. Like, yes, there are still, and this is my own ignorance, not, being fully prepared of knowing the exact execution path of it. But the general high level of it is there has to be a global consensus of the majority stakeholders that we need to upgrade to this particular thing. And then a particular block number is set. The code is submitted. And so then, and the code is only submitted with that majority vote. And again, this is all immutable. This is all unforgeable, like at least until quantum computing. And so everything is set in stone. It gets voted on. It gets passed. The code sits there. The code has the votes required to be initiated, and then a particular block number, because blockchains don't work in time; they work in blocks. So there's block number 1, and then it takes however long it takes to fill block number 1, and then we get to block number 2, and then there's also more to it, but nonetheless, it works in block numbers. So a block number is set, and it says at this block number, we are going to put this code into action. The machine is going to do all of this. It's going to put the code into action. And now all of a sudden we have created a hard fork of the initial blockchain. The initial blockchain will continue to, as it always has, but the new shift fork will then be, and people would use the new fork because that was the consensus, that was the decided upon future of it. So that's glossing over a lot of technical details, and I didn't get it perfectly right. But in a nutshell, that's the path forward for blockchains, is hard forking into something quantum resistant, and it comes with mess for sure. The discussions on Bitcoin specifically is, if there's a hard fork, one of the ways that it could be handled, Satoshi, the infamous and anonymous,
perhaps mythological,
Bitcoin, perhaps mythological. There is a particular implementation of this hard fork where Satoshi has to do one of two things. One, wake up and migrate his from the old fork to the new fork, or two, lose literally millions of Bitcoin forever. So, and that's again oversimplification, but it's part of the interesting discussion around, like, how does the fork happen? I don't believe it has to happen where there's an impetus on every single person to manually migrate their assets. But nonetheless, it is mitigatable. And it can still continue, but it is not without, we'll say, unknown challenges, just things that the space has not encountered before, which goes back to know the underlying, know what you're getting into, and know what to keep your eyes on, and pay attention. If I had millions of dollars in Bitcoin, like, yeah, I'm going to pay attention to this. Like, I'm going to follow it because it has significant implications.
You mean you don't have millions of dollars in Bitcoin? Oh, man, all this time.
Yeah, I got to come clean about something. It's all a lie. I just lose money.
Well, I think that kind of is a good place to kind of put a tail in that thing, or kind of wrap up that discussion around all that. I think it's a good thought exercise and discussion point. The one thing I had to bring up here today, and I don't have a ton of information on it, but every morning I listen to news broadcasts as I kind of drive into work, and it's basically a CNBC simulcast over streaming radio. and they have commercial breaks. And I don't know if I don't think they're the same commercial breaks on CNBC. I don't know. Maybe they are. And CNBC has just really gone down the gutter as far as advertisers go, because there are some really weird commercials that I hear. But I assume it's just the streaming provider interjecting their own commercials into the breaks that the broadcaster's taking. Nonetheless, I had queued up this topic with you, Viper, about a week earlier, and it was very ironic that today I was driving in and it said, Are you interested in all the hype around Bitcoin? Are you afraid of the risks? Have we got a product for you? It's a new ETF out there on the market. It's 100% downside protected. You can have all the benefits of the upside with none of the risks of the downside. And I was like, you got to be kidding me. What am I listening to right now? So I actually did a Google of this. And there is, of course, I knew it was real. I'm sure it was real, right? They wouldn't put something on there that you couldn't buy. There is an ETF out there. Its ticker is CBOJ. And I think of Centralized Bank of Japan. But what it is, and this kind of speaks to the go read the prospectus. Thank goodness for regulation around this stuff that says if you're going to offer a product, you have to tell people what it is and describe how it works. And so the way that they talk about this, let's hypothetically say that I got $100 and I want to put $100 in this ETF because I'm like, yeah, Bitcoin, you're going to the moon, baby. I'm coming with you. But just in case you don't, I don't want to lose my money. So you give this ETF $100, and what they do is they pull that $100 and they take a percentage of it and they put it in U.S. Treasuries. And the amount that they put in the U.S. Treasuries is enough so that after 1 year, they will have $100. You'll have $100 back. So basically, to be 0% downside risk, you have to hold it for a year. Effectively, that's how they modeled the product, and they can give you your $100 back because basically the Treasury made your $100 back. Now the catch is, they will give you the upside of Bitcoin up to a certain percentage. I think it was 11% or something like that for this particular ETF, which means if Bitcoin went up, 500%, 600%, they're going to go ahead and pay you, 11% return on that $100. So maybe that's your bag of donuts. You're not really holding the asset. You're just an ETF. It's a exchange traded fund that is representatively trading. So you're not owning any Bitcoin. But they're saying that your return will be between 0 and 11%. And maybe that's what you're interested in. But the way that it was advertised was if Bitcoin goes to the moon, I was led to believe I would be at the moon with it. And that if it went, to Middle Earth, that I would not be with it. I would still be on the surface. So I just thought that was an interesting thing. Viper, I don't know that you even heard of it other than I mentioned it a few minutes ago before we, started recording this show. But thoughts from you?
I had not heard of it. Now I have. And it infuriates me. Like, this is okay. So the worst case scenario, you put $100 in, and in a year,
Yep,
you get $100 back. I have a plan. Now hear me out. And I mean, this is not me being, dramatic. I think this is a very, very legitimate plan. So do you happen to know off the top of your head roughly what a 1 year note yield is right now? I want to say 3
could
to 4%.
be. I don't think it's quite that high.
Maybe?
But actually, it might be. Since the interest rates, because before they raised it was 2. So yeah, I would say it's probably in the 4% range, maybe.
Okay, so here is Blockhead Trader exclusive. Don't get rugged by some stupid ad on the radio. Here is what I believe would be your bulletproof own strategy to do way better than this thing. And so, all right, so let's say 4% is the 1 year note yield. So you wanted to put $100 into this stupid ad you heard on the radio. So take $96 and go buy a 1 year yield, a 1 year treasury note. And so now you have $96. So in a year, you end end up with $100. Now, take $4 and just go buy a Bitcoin. And there you go. You did it. You did the thing that they were offering. You have 100% downside risk protection, and you did it all yourself. Is that
That
fair?
is very fair. But a plot twist here, Viper. So let's you and I offer this product to our viewers, and then let's give them the opportunity to also pay us, yours truly, the same management fee that this ETF charges. Because I didn't touch on that. So when I look this up, this is one of the most expensive ETF management fees, coming in at, I believe, almost 0.75% annual. So I think it was like 0.69 or 0.7% management fee of this. Keep in mind, this is not actively managed. This is at least that I could tell, it wasn't actively managed from what I read. Yeah, it's a formula that basically says we'll cover your cost like you just laid out right there. I cannot. I don't know. Maybe I'm missing something, but go buy some SPY.
That you're actually 100% getting your money back. It's going to be 100% less what you just paid them to do that for you. And so in a reverse worst case scenario, Bitcoin goes up 5,000%. And we hit $1 million Bitcoin, like everybody's saying.
Everybody.
Like, not everybody's saying. But some people are outlandishly saying, guess what? Hope you enjoy that. Maybe 2 Happy Meals, $11 on your $100, because that's all you're getting out of that. And so it just speaks to kind of what the general thesis is for the show is these sorts of things. People, let me rephrase that. People think they need to jump into those sorts of snake oil things because it sounds easy, because they think the market is hard. They think the market is unapproachable. And so they're like, okay, I can't do this myself, but all right, you're going to charge a fee. That's fine. Like you know the market, you know what you're doing. Like, I'm just going to pay you for it. But it's not like, it's accessible. It's not that, I mean, I'm not going to deny that there is stigmas. There are barriers that you have to break through that, but, yeah, it's not magic. It's not voodoo here. It's math and it's probabilities and all that stuff. So don't buy this ETF.
Well, that brings us to the end of this week's episode. And as Viper was wrapping it up there, may your system stay decentralized. Teaser for a potential future topic. But hopefully you guys enjoyed a little bit of this conversation around crypto space, specifically Bitcoin, and the why would we want to stockpile it as a national reserve? Where is this value? What's driving it? Devoid of utility and stuff like that. And then the underlying message of all of this stuff, kind of really highlighted in that ETF of no downside risk, which, also laced little hints of it there. And we talked about the stockpile and the value is understand what's in that underlying, understand what's driving it, right? It's the ethos that we always kind of talk about on this show is that, don't be afraid to pop the hood and try to understand what makes the engine tick, what makes the wheels go round. And it's that curiosity, it's that inquisitiveness that will lead you to a greater understanding of the things that you're trading, of the things you're investing in, of the things that you're using every day. And as I think it was always brought up when I was a kid, and maybe it was Schoolhouse Rock or something, right? Knowledge is power. And so just go out there with that thirst and hunger for knowledge. Be inquisitive, ask questions, ask the dumb questions. Don't sit there and be afraid of, oh, that's a dumb question, I don't want to ask that. Go ask it. And if you're afraid to ask it, go talk to ChatGPT. I'm sure it's heard a lot more dumb questions than whatever you've got to give it. So hopefully you guys are finding something out there to trade. Good luck, and we'll keep on bringing you the content. Hopefully you have good luck out there in the market, and remember to think outside the block.